especially after something like this election.
Oh, yeah.
Like everyone's trying to figure out what's next.
Right.
Well, today we're taking a deep dive into an analysis from Meet Kevin.
Kevin Pa.
Yeah, exactly.
Oh, his stuff.
He's got this YouTube video
Oh, I saw that one.
where he breaks down all the market trends in this new, like, post-Trump world.
And he doesn't hold back either.
No, he does not.
Gets right to the point.
And, you know, we're going to look at what's happening right now,
Obviously.
but also what could be coming next.
The predictions.
Exactly.
Trying to stay ahead of the curve, right?
That's the goal.
And make those smart decisions.
Yes. And Kevin, he gives some actual strategies to use
Like right now.
right now.
Which is so helpful.
Yeah, he talks about these home equity lines of credit.
ACLO says.
And why 2025 could be
Oh, yeah, that part.
prime time to buy.
A lot of people are talking about that.
So you ready to dive in?
Let's do it. I'm really curious about that whole Trump flip thing.
Yeah, me too, how everything shifted after the election.
It's like the market did a 180.
Totally. But before we get to the post-election stuff, Kevin lays out some recent market trends.
To set the stage.
Yeah, and it was already getting pretty interesting.
Even before the election.
Right. He points out that in places like Atlanta
Okay.
and San Diego, median home prices, they dipped a bit.
About 6%.
Yeah, from their peak this summer.
Summer was hot.
But they're still higher than in previous years?
Yeah, that tracks with what we're seeing nationally.
Oh, yeah.
Inflation is definitely keeping prices up.
For sure, but then there are these, like...
Oh, I know what you're going to say.
The COVID boom towns?
Yeah, like Boise.
Boise, exactly.
But Austin.
Austin, of course.
Those went crazy.
So Boise saw a 13% price drop.
Ouch.
And Austin...
Even worse.
Get this, down 25% from its peak.
That's wild.
I know it's a huge correction.
But they seem to be stabilizing, though.
Oh, really?
Yeah, at those levels we saw at the end of 2023.
So maybe a sign of a bottom.
Potentially, but we gotta weigh that against other things, too.
Right, like what else is going on?
Exactly. Like, remember those warnings from Dr. Horton?
The home builder?
Yeah. They were pretty worried even before the election.
Oh, yeah, they sounded conservative.
They were saying buyer demand was strong.
Okay.
But some people were holding back.
Because of the election.
Yeah. All that uncertainty.
Everyone waiting to see what would happen.
It was like the whole market was holding its breath.
And then, bam, the Trump flip.
Right, and interest rates shot up.
Like, immediately.
It was crazy how fast they jumped.
So does that mean the housing market's going to crash?
Well, that's where Kevin Pa's analysis gets really interesting.
Okay, I'm all ears.
He actually predicts that interest rates will plummet in 2025.
Really? Why would they do that?
He thinks the job market will weaken.
Okay.
And that could lead to lower rates to try and boost the economy.
So a weaker job market means lower interest rates.
That's his thinking. But a weak job market is usually a bad sign, right?
Yeah. Could that mean a recession is coming?
It's possible, but not for sure.
So we're playing a bit of a guessing game.
Kind of. But if the job market gets stronger, then rates might stay high.
And that'll make things harder for buyers.
Definitely. So even after the election, there's still so many unknowns.
It's like a roller coaster. We don't know which way it's going to go next.
And to make things even more complex, Kevin Pa points out that different parts of the market are being affected differently.
You're talking about market segmentation.
Exactly. We can't just look at the overall picture. We need to break it down.
Okay, so give me the breakdown.
Well, one of the most surprising things is that luxury real estate is actually booming post-Trump.
Really? I would have thought that would be the first to go down.
You'd think so, right? But he says it's because of increased business optimism.
So some people are feeling good about the economy with Trump in charge.
And they're putting their money into high-end real estate.
Interesting. So while some folks are tightening their belts, others are popping champagne.
It seems that way. But here's where it gets interesting for the average buyer.
Okay, tell me more.
The lower end of the market, those homes between $400,000 and $600,000, they're experiencing price compression.
Price compression. What does that mean?
Basically, the gap between the asking price and the selling price is shrinking.
Oh, so sellers are having to lower their prices.
Yeah, they're being more realistic.
Which could mean some good deals for buyers.
Especially as we head into the slower winter months.
So even in this crazy market, there are still opportunities out there.
Absolutely. But with all these different factors at play, what's the best way to navigate it all?
Does Kevin Pa have any advice?
He does. He lays out 2 key strategies that he thinks are essential for anyone looking to buy or sell right now.
Okay, I'm ready. What's the first one?
He calls it securing your lifeline.
Sounds dramatic.
It is. It's
Yeah.
all about getting a HELOC.
A home equity line of credit.
Exactly.
But do you need one even if you're not planning to buy or sell right away?
That's what he recommends.
Really? Why?
He says to get it set up now so you're ready when the right opportunity comes along.
So it's like an emergency fund, but for real estate.
Yeah, that's a good way to think about it.
Okay, I get it. So a HELOC gives you access to funds for all sorts of things.
Exactly, including real estate investments.
Okay, so why are they so useful in a market like this one that's so unpredictable?
That's a great question. And that's what we're going to explore in more detail as we continue our deep dive.
So we've got that HELOC set up ready to go.
Ready to pounce on those opportunities.
Okay, so what's next? What's Kevin Paz's second strategy?
This one builds on what we were just talking about.
Finding those opportunities in the market.
Exactly. He calls it buying the dip.
Okay, I've heard that before, but how does it apply here?
Well, he says while that luxury market's going crazy...
Right, fueled by all that business optimism?
Yeah, the lower end is where the real deals are.
You mean those homes in the $400,000 to $600,000 range?
Exactly. Remember, price compression.
Yeah, those sellers are having to be more realistic with their prices.
Exactly. So that's where you can snag a bargain.
So even though things are uncertain overall, there are still good deals to be found.
Absolutely. But he doesn't just say, go buy anything in that price range.
Right. Got to be smart about it.
You need to negotiate a good deal.
Make sure it's actually a good investment.
Exactly. You don't have to jump on every opportunity.
It's about quality over quantity.
Find those diamonds in the rough.
And this is where that HELOC comes in.
Yes. Having that credit ready to go gives you flexibility.
So you can act fast when you find that perfect property.
Exactly. No need to scramble for financing.
Okay, but interest rates are still pretty high.
That's true.
So is it really the right time to buy, even with these good deals?
That's where Kevin Paz's prediction comes in.
The one about interest rates dropping in 2025.
Yeah, he says if you get a good deal now...
You could refinance later when rates are lower.
Exactly. It's a bit of a gamble.
But it could pay off big time.
If his prediction's right.
So it's all about timing and a little bit of risk.
But that's real estate for you.
It's all connected. The election, the job market, interest rates, the housing market.
It's like a giant puzzle.
Where one piece affects all the others.
And we're trying to figure out how it all fits together.
Okay, so we got Kevin Paz's two strategies, HELOCs and buying the dip.
To help navigate this post-Trump market.
But how does he see this all playing out long term?
Is it all doom and gloom, or is he more optimistic?
Yeah, what's his overall outlook?
Well, he makes a really interesting comparison.
Okay, I'm intrigued.
He thinks 2025 will be more like 2003 than 2008.
Okay, take me back to 2003.
So back then, the stock market had a correction.
Okay.
But real estate stayed pretty stable.
So it wasn't like 2008 when everything crashed.
No, not all.
So he's saying the stock market might take a hit, but housing will be okay.
That's his assessment, but of course no one has a crystal ball.
True. Things can change quickly.
But I appreciate him putting himself out there with a prediction.
It gives us something to think about.
And it's not just about the prediction itself.
Right.
It's about his reasoning, the connections he's making.
Yeah, he's looking at all these different economic indicators.
And trying to piece together a plausible scenario.
Okay, so what does this all mean for our listeners?
What should they be taking away from all of this?
Yeah, what's the big takeaway?
I think the main point is that Trump's election has definitely shaken things up.
No doubt about that.
But it hasn't completely destroyed the real estate market.
So it's not all bad news.
There are challenges, but there are also opportunity.
And the key is to be informed and ready to adapt.
Exactly. That's where knowledge is power.
The more you understand, the better decisions you can make.
And that brings us back to those two strategies from Kevin Powell.
HELOCs and buying the dip.
Those are actions anyone can take right now.
Whether you're a seasoned investor or just starting out.
Exactly.
And those strategies really resonate with me with all this uncertainty.
It's about being proactive.
Having a plan.
And being ready to pivot.
Okay, so we've talked about the election about Kevin Paz's predictions and some strategies.
A lot to digest.
But before we wrap up, I want to leave our listeners with something to really think about.
A final thought to ponder.
Exactly. Kevin Paz's prediction that 2025 will be more like 2003 than 2008.
Yeah.
It raises some big questions about the relationship between the stock market and real estate.
That's interesting.
If the stock market dips, but housing stays strong, what does that tell us?
About the economy as a whole.
Yeah, what other forces are at play besides interest rates and job growth?
And if his prediction is right, what does that mean for investors?
Should we all be shifting away from stocks and into real estate?
Or is there a way to diversify to minimize risk?
These are big questions.
And we don't have all the answers.
But that's what makes this so fascinating.
There's so much potential, but it requires careful analysis.
And informed decision-making. So to our listeners out there, think about how all of this applies to you.
What are your goals?
What are your concerns?
What opportunities do you see?
Do your own research, stay informed, and be ready to capitalize on what emerges.
Because owning real estate can be a powerful way to build wealth.
But you got to be prepared.
Knowledge is key.
So should we all be selling our stocks and buying real estate?
Well, it's not quite that simple.
Right, there's always more to it than that.
It's tempting to hear a prediction and think there's one right answer.
Yeah, like a magic formula.
But investing is way more nuanced than that.
Okay, so what's the wrong way to look at this 2025 prediction?
The wrong way is to take it as a guarantee and make huge decisions based on just that.
Like going all in on real estate.
Exactly. Remember, it's just one analyst's view.
And even Kevin Paul admits things can change fast.
The market's unpredictable.
So we shouldn't panic and make rash decisions.
Definitely not. Instead, use this prediction as a starting point.
Okay, a starting point for what?
For a conversation about your own financial goals.
And how much risk I'm comfortable with.
Exactly.
Okay, so let's say I'm listening to this and I'm thinking, this 2025 thing is interesting. But what does it mean for me personally?
We'll take a look at your investments right now.
My portfolio.
Yeah, and ask yourself some questions.
Like what?
What's the mix between stocks and real estate?
Go.
How much risk can you handle? And what are your goals, both short-term and long-term?
And then based on those answers, I can see if I need to adjust anything.
Exactly.
So if I'm mostly in stocks and worried about a correction,
maybe you diversify a bit more into real estate.
or if I'm already heavy on real estate,
Maybe you explore different types of real estate investments.
to spread the risk.
It's all about finding the right balance for you.
I don't have to figure this all out on my own right.
Nope. There are financial advisors and real estate experts who can help,
Always good to get professional advice.
especially with big financial decisions.
I think what Kevin Paul is showing us is that we're in a time of change.
The Trump election definitely shifted things.
And the future of real estate is still uncertain.
But instead of being scared of that uncertainty,
We can use it to our advantage.
by being prepared
Informed.
and open to new possibilities.
It's a time to be strategic and adaptable.
Exactly.
So to all our listeners out there as we wrap up this deep dive, remember that the real estate market is dynamic and complex.
And full of potential.
Don't be afraid to engage with it, to learn and make it work for you.
Even in uncertain times, there are opportunities.
You just have to be ready for them.
Prepared, informed, and ready to seize the moment.
Well said. Keep those HELOC applications handy, everyone, and happy investing.